Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on October 26th, 2012. Our time is 9:08 Mountain, 11:08 Eastern. Our radio show runs AM 640 in Toronto, QR 77 in Calgary, and 630 CHED in Edmonton. Now, if you ever miss a radio show, don't worry, because we have them archived for you on Harold's websites, rarecoloreddiamonds.com and HESradio.com. And another thing we have, and I have an iMac, I have an iPhone. Actually, even if you have a PC, all you need to do is put iTunes on there. It's absolutely free of charge, does not cost you a thing. And you can subscribe to our free weekly podcast, the radio show, and then you can take it anywhere you want. We are portable. So look at that option as well. Get our newsletter. That's the companion to the radio show. Speak with Worldwide at 1-866-623-2002. Their website, wwpmc.com. Connect with them and get our free weekly newsletter. And don't forget, for those in Calgary, Worldwide Precious Metals, the company Harold recommends you use when it comes to investing in gold and silver. They're going to be in Calgary November the 12th, and no obligation. They would be happy to meet with you. They're meeting with existing clients. Be happy to meet and greet and give you an idea of what's involved in this market and why you should have an allocation of precious metals and start your own precious metals investment account. Harold's website is rarecoloreddiamonds.com, rarecoloreddiamonds.com. The telephone number to speak with Harold about diamonds, 1-800-432-1022. Our featured diamond this week is a .030 carat radiant cut, fancy deep pink Argyle diamond. And we have lots of information in our newsletter this week on Argyle pinks. Rio Tinto, the company that owns the Argyle mine in Western Australia, has finished their tender, and I know Harold is going to talk about it. We have a monthly newsletter. We have our weekly newsletter. Get our newsletter from Harold this week. Must-read information on pink diamonds. And take a look at our featured diamond this week. It is a must-have to add to your collection and your investment portfolio. And I like this because I think it's so important. It puts things in perspective. More than 90% of the world's pink diamonds come from the Argyle mine in the East Kimberley region in the far northeast area of Western Australia. At Argyle, pink diamonds making it to the annual tender are literally 1 in a million. For every 1 million carats of rough diamonds produced from the mine, only 1 polished carat is offered for sale in the tender. In terms of global diamond production, pinks make up only 0.03%. Large pink diamonds tend to go to museums, are gifted to royalty, or end up at auction houses such as Christie's or Sotheby's. Christie's has auctioned only 18 polished pink diamonds over 10 carats in its 244-year history. Experts agree the price for colored diamonds, pinks in particular, are on the rise, noting that price barriers are being broken every year. Buying a pink diamond today is like buying a Picasso painting while he was still alive. And Harold, we have approximately, maybe 7 years left in the mine. And they just finished up their tender. One of the people that picked up an Argyle diamond, and it was the Argyle Siren, was John Glatz, and he's from Singapore. One of the quotes that I thought was quite interesting that he had to say is, I think there is an awareness that the mine life has less than a decade to run. There's a greater demand. It's like the art world. It's a store of value, an appreciating asset, and something that will not be replaced. It's just an exciting time in pink diamonds.
You better believe it is, Randy. It's one of the most exciting recommendations that we've ever made, and obviously one of the most beautiful. So the Argyle tender is certainly in the news. It's a big phenomenon. It's the number one event in the entire diamond business each year. And, you know, the funny thing is that the Siren that was sold this year for $2 million, last year it was a 2-carat round, vivid purplish pink that sold for $2 million. So within 1 year, a diamond that's more than 50% or substantially higher, because one is a 135, the one that sold this year for $2 million, and the one that sold for $2 million last year was over 2 carats. So you can see the prices are going higher as the diamonds are getting smaller. It's one of the best investments that you could possibly make. By the way, last week we featured a fancy, vivid pink Argyle, a VS1, one of the most beautiful Argyle diamonds you could ever possibly imagine, and that diamond was purchased immediately upon hitting the website. Is one of the most amazing Argyle pink diamonds ever, and very, very happy that one of our Canadian clients was able to actually invest and buy that diamond. It's a tremendous, tremendous diamond. Congratulations. This week we have a very, very valuable diamond, because the way that the GIA, the Gemological Institute of America, grades pink diamonds is that faint is the lowest, where you just see a very, very slight tinge of pink. We don't sell those. Very light. Fancy lights have a beautiful pink hue to it, and we do the odd time sell a fancy light pink diamond. But the best colors are fancy pink, fancy intense pink, fancy deep pink, and fancy vivid pink. We have some of the most beautiful fancy vivid pink diamonds that you've ever seen in your life on our website. In fact, we have more Argyle pink diamonds than anybody else in the world does. In fact, we have more yellow flawless diamonds than any other company in the world does, because that's where I've invested most of my money, because those are the diamonds that will increase the most in value percentage-wise and do the best for my clients. And you don't have to go out and spend $2, $3, $4, $5 million on a diamond. Most of our clients invest under $100,000 and get phenomenal diamonds that have tremendous track records. So the featured diamond this week is an extremely rare, fancy, deep pink, almost red in color, and those that know diamonds know that reds are the rarest of all diamonds. In fact, the vivid and the deep pinks are so close to being red, that's why these diamonds will continue to increase in value so substantially. So, one of the best investments that you could possibly make at this particular point, with inflation coming and weak currencies, is rare colored diamonds. Let's talk about the pinks first, because they're in the news. Again, what Argyle does, Argyle is the name of the mine, actually. The Argyle mine was discovered in 1985. It's now the largest producing diamond mine in the world, and it produces 30 million carats of diamonds a year. 30 million. But most of those diamonds are white industrial diamonds used for cutting other diamonds, and they have no investment value whatsoever. Argyle is known for their pink diamonds. They produce 95% of the world's pink diamonds, and that mine is going to close. So, simple economics tells you if the demand for these diamonds is extremely high, the highest that they've ever been, and that is the truth, but the supplies are very low and the mine is going to close, this makes that scenario one of the best investments you could possibly make. And the fact is that there's so few of them available. Again, go on our website, rarecoloreddiamonds.com, rarecoloreddiamonds.com, and go to our loose diamond section. You'll see all of the colors that we carry in diamonds, reds being the most expensive at about $2.5 million a carat, then comes blues, and then greens and pinks. However, pink diamonds are going to overtake almost every other diamond financially, because again, the one major mine that produces 95% of them is going to close. This is one of the best investments you could make. They never ever go down in price because there's so few of them available, and now that the mine is going to close, we think that the price of pink diamonds are going to increase 10 times what today's prices are. That means that if you buy a pink Argyle diamond for $50,000, that diamond could be $500,000 in 10 years from now. We believe that the mine is going to close by 2018. It's now 2013. We only have 5 years to go. Give it 2 years for the diamonds to run out, and you're probably looking at one of the best investments you've ever made. It's very difficult in this day and age to make any money in any markets at all. They're very volatile. They're unpredictable. The stock market could drop 20-30% because the Bush tax credit's coming. The metals are volatile. We're coming out of a tough month in October and going into a very strong month in November, December, January, and February. But diamonds aren't seasonal. Diamonds like this are just phenomenal investments. They're very private. Nobody knows that you own them. They're portable private wealth, and they can be sold in other currencies. So again, you're talking about one of the most important assets you could ever own at a time when they're going to skyrocket in price. Most of my clients own these type of diamonds, yellow flawless diamonds and Argyle pinks. We're the largest dealer of these diamonds because in the past, what has happened when these diamonds come out of the mine, they've been bought by major jewelers around the world and put into beautiful jewelry pieces. And then those pieces are worn and enjoyed, and in most cases handed down from generation to generation. That's why you can see that a diamond, maybe 30 years ago that was bought for maybe $100,000 is now a $2 million diamond. That's how diamonds do over the longer term. So number one, to buy an Argyle pink diamond is a phenomenal opportunity, and there's very, very few of them available for the entire world. As I say, we have invested very heavily in them, and most of the top diamonds are sitting on our website right now. Go to the vivid section of pinks and see some of the most valuable diamonds you've ever seen. A lot of these are museum-quality pieces. So the thing is that the mine is going to close. There will be no more of these diamonds available, and the prices will increase substantially. Now is the time to get involved in Argyle pink diamonds, again, with all the news that's going on. And by the way, if you call us, we'll send you the video that last week came from the BBC, and they were talking about the Argyle pink diamonds because of the Diamond Jubilee this year. The Argyle pinks were in London, and they went crazy over them. They were so amazed at how beautiful these diamonds are and how expensive that they are, because again, a 1 carat or just slightly over 1 carat vivid pink diamond is selling for $2 million. Just a few years ago, that same diamond would have sold for under $1 million. So those type of diamonds are doubling almost every 2 years in value. Where can you make that type of money anymore? You can't make it in real estate that easily. You certainly can't make it in the markets, and the stock market is one of the scariest places to put your money. But during times of high inflation, rare colored diamonds like the ones that we carry have increased in value so substantially that in 79 and 80, the last time we had a similar market condition to what we have right now, these were the type of diamonds that went up 500% in 2 years. 500% in 2 years. How in the world can you make 25% on your money in 2 years anymore without taking a gigantic risk? And I can assure you there is no risk in buying and investing in Argyle pink diamonds. There will be no more of them very, very soon. So we love these diamonds. We deliver these diamonds directly to you. But one of the things about investing in the diamond market is how do you resell them? And that has always been the situation in diamonds, in emeralds, rubies, and sapphires, in collectibles type of thing. There has never been a way to resell these diamonds and these collectibles in the past. And as long as I've been in this business, I've had a large clientele, and we've been successful selling diamonds all over the world. However, we built H. Siegel Fine Auctions. It comes under the code of hsfineauctions.com, and it's the only live real-time auction site to resell diamonds. We built this for our clients. So our clients can invest in diamonds through my company, and then they can resell these diamonds for down the road. And the way that we get paid is when you profit. So if you don't do well, we don't do well. We get 10% of the profit only. So let's say, for example, you bought an Argyle pink diamond for $100,000, and let's say that diamond sold for $500,000 down the road, and you made a $400,000 profit. We would get $40,000, and you would get all the rest. The thing is about investing. I've always been a firm believer that the company should do well when the client does well, and the company should not do well if they made a recommendation and the client didn't do well. So that's basically the way that I've set up my company, is that when my clients do well, my company does well, and that's the way that things should be. So I'm very, very bullish on Argyle pinks, but obviously I'm not the only one. 7-8 years ago, I wrote an article called Rare Colored Diamonds, the Best Kept Secret. Nobody knew about colored diamonds back 7 years ago. Nobody wrote any articles. Nobody ever talked about them because they've always been such a private asset. The reason that I brought it to the forefront at this time is because we're so concerned about inflation. I've traded these markets for 35 years. I've been through the inflationary times of the 79-80 period. We caught gold all the way up to $800 from $125, and the same in silver. And I was involved in diamonds when they went up 500% those 2 years. That's why I know that these moves are coming again. Add to the fact that the Argyle mine is going to close down, makes this one of the best investments you will ever make. And again, these diamonds increase by at least 25% a year, but the closer we get to the mine shutting down, these diamonds will take on a life of their own and rise more than anything that you've ever seen. So the Argyle pink diamonds, while they still exist, is one of the best investments. Go on our website, rarecoloreddiamonds.com, go to the loose diamond section, look at our pink diamonds. We carry fancy pinks, fancy intense pinks, fancy deep pinks, and fancy vivids. I've even got a match set, the only one that I know of available in the world today for sale, a fancy vivid purplish pinks that would make an unbelievable set of earrings. I've got a matching diamond that would make a ring, and if you did that, that would sell in the millions of dollars when we sell those diamonds for you down the road. So again, we make money when you make money, and that's the way it should be. On the other situation, yellow flawless diamonds are skyrocketing in price, and we carry the best that you can possibly get. Our yellow flawless diamonds are phenomenal. The colors are strong. These diamonds increase by 25% a year. They double every 4 years, but during times of high inflation, they've gone up 500% in 2 years, and we recommend yellow flawless diamonds very, very heavily. In fact, many of our clients are buying numerous diamonds because they're so concerned about the currency markets. So these will be used as currency down the road, and the fact is that in 1979 and 80, these were the type of diamonds that went up 500% in 2 years. So if you buy and invest in a yellow flawless diamond for $20,000 today, it's very possible in 5 years we're going to be selling that diamond for you for about $100,000, 5 times what you paid for it. That's what happened in 79 and 80. That's what it looks like is happening again right now. But you don't want to wait for that to happen. You don't want for inflation to be on top of you, because then you're going to miss the moves. The other things about these investments, they're not short term. So you don't want to buy a diamond today and sell it a year from now. You're not going to make the money that you need to make. Most of my clients that buy these type of diamonds and invest in yellow flawlesses and Argyle pinks and D-flawless whites, by the way, buy them for retirement. You know what's happening right now in the retirement, in the stock markets and that. You get your statements at the end of each month, and you know what your RSP is doing. Now, where you cannot buy a diamond and put it in your RSP account, many of my clients have been so sick and tired of the returns that they've seen on their stock portfolio that they've been just buying diamonds for their retirement. Because a diamond that you can buy today for $20,000, a yellow flawless, you put it away for the next 10 years, and that diamond's going to be worth $80,000 to $100,000. Again, if you put $20,000 into the stock market, what is that going to be worth in the next 10 years? So these are alternative markets. These are some of the best markets you can invest in. And again, we deliver to you the highest quality diamonds. And the reason that we do that is because I'm the one responsible for reselling them for you. And there's no excuses. You know, when we put a diamond up for sale, we're going to sell that diamond for our client because we want our client to do well, and I want my company to do well. And it's a perfect situation. So again, I've never been more bullish. The Argyle pink diamond market is on fire. Everybody's talking about it, and we're the leader in Argyle pink diamonds. All you have to do is look on our website, and you will see more top quality Argyle pinks than anybody else in the world. In fact, if you were to total everybody else's Argyle diamonds, whatever they have on their website, it doesn't come close to what we have. And we just spent a small fortune buying next year's production. So I'm extremely excited. I am the type of person that definitely puts my money where my mouth is. I own every single diamond that is on my website, and I don't think anybody else can say that. Yellow flawless diamonds start at $15,000 and go up from there. Argyle started about $25,000 to $30,000 and go up from there. You know, it's funny. Last year you could have bought Argyle pinks in the $20,000 range. Now they're up to $30,000 to $40,000, and this will just continue and continue. For a diamond to go from $100,000 to $1 million 10 times, something has got to happen, and that is happening in the markets right now because the mine is going to close. There will be no more of these pink diamonds, and they will just absolutely continue to skyrocket in price. Where they're going up 25 to 50% at this particular point, as we get closer to the mine closing down, these diamonds will start to go up 50 to 100% a year. We want you to make the money, not pay the money. Now's the time to get involved. We've got massive inflation coming. Some of the biggest analysts in the world are saying the same thing that we've been saying for the last 10, 11 years. You know, back in the 90s, the stock markets were strong, the dollars were strong in the United States, the U.S. dollar was very strong, and the economy was great, and gold was at $250, meaning that when the economy is in great shape, the demand for hard assets is not as strong, and the price is reflected. Gold at $250, but now we're sitting at $1,700 gold. We're sitting at 30 some odd dollars silver, and diamonds are skyrocketing in price. That is only happening because the perception in the market is that we're going to have currency problems and massive inflation. And these are the assets that will do best. Now is the time to get involved in these, and you can get involved for as little as $15,000. Now, $15,000 is a lot of money, and a lot of people do not have that type of money to invest. So let me just say that, you know, not every market is for everybody. And the last thing that I would let somebody do is invest all of their money in just one asset. So if all you have in the bank is 15 or 20,000, this is not the right type of investment for you, because you don't tie up all of your money in one asset. You're going to want to hold on to these diamonds for the next 5 to 10 years. That's where the major money is going to be made. And if you're looking to sell a diamond prior to that, you're just missing out, because the next 5 years is when we anticipate the biggest moves coming in these amazing assets. So again, go to our website, rarecoloreddiamonds.com. Go to the loose diamond section. Look at our yellow flawless diamonds. They're the most beautiful diamonds that you could ever see, and the quality of these diamonds are just sensational. We basically handpick every single diamond, and if the color is not extremely strong, 8, 9s, and 10s, we just don't handle them. Argyle pinks, we've got the most beautiful Argyle pink diamonds you'll ever lay your eyes on. The Argyle, the feature diamond this week is a very, very rare diamond. The feature diamond we had last week sold within minutes upon it going onto the website, and this one will do the same. So again, if you're looking to protect yourself with what's on upcoming, take the risk out of the marketplace. You've got to hedge yourself with hard assets. Gold, silver, and these Argyle pink and yellow flawless diamonds will get you through the difficult times and make you an awful lot of money. I'm really excited about what's happening in the markets, Randy.
Well, Harold's right. It is about monetary policy, and that's why we are where we are when it comes to hard assets. The way they're treating paper money. They're treating it like confetti. They're printing it, and as a result, we're seeing gold and silver and diamonds go up dramatically in value. Don't sit back and let it happen to you. You can obviously take the next step and make it happen for yourself. Make some money off of it. RareColoredDiamonds.com. The telephone number to speak with Harold, 1-800-432-1022. This week's diamond, the featured diamond, a 0.30 carat radiant cut, fancy, deep pink Argyle diamond. And I would say, get our free weekly newsletter from Harold, because this week we have 2 stories, one from the Wall Street Journal, one from an outfit out of Australia about the Argyle pink tender. And I mentioned earlier that John Glates, he was the person that picked up the Argyle siren, and they think that could be worth $2 million on the retail market. He says, in this article, from my own personal experience, I've seen prices effectively more than double since 2005 and 6. So get our newsletter from Harold, see the featured diamond, read the pink articles over, and even Harold will send you that BBC video that we had. And there were 2 stories last week, and they are must-see stories. The Wall Street Journal did 2 stories on yellow diamonds. So connect with Harold, RareColoredDiamonds.com, or call 1-800-432-1022. And Harold, we have about a minute and a half left. Now is the time for hard assets. You look at what's happening around the world. Sovereign debt crisis continues. Still concerns about Greece and Portugal and Spain and Ireland. The list goes on and on. Also, the U.S. debt and deficit, the fiscal cliff situation. There's food inflation, gas inflation, geopolitical concerns. The financial crisis in some ways continues because, let's face it, they haven't solved any of the problems that created the financial crisis to begin with. All the people are still involved that were pulling the levers before. So what do we do in this scenario? We need to protect ourselves.
Yes, we do, Randy, and we need insurance. If we believe in insurance on our car, our health, our life, and everything, you need insurance against financial catastrophe. And again, that could be right around the corner. We can't take that risk. The fact is that if we lose our money now, it's going to be very, very difficult to rebuild. So again, diversification is extremely important. To get hard assets into your portfolio as protection and profit is extremely important. Never been more important than it is right now. Again, I'm very, very bullish on our recommendations. I love the gold and silver market physically, and I love the rare colored diamond market. It's where all the money is going to be made over the next 5 to 10 years.
Thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
Our radio show runs in Toronto, also Edmonton, and Calgary. For those in Calgary, the company Harold recommends you use for investing in precious metals, worldwide precious metals, they're going to be in Calgary the week of November the 12th, and they would be happy to meet you. No obligation. Just sit down, meet them in person, let them earn your business, and educate you about these hard asset markets regarding gold and silver. Their website, wwpmc.com, telephone number 1-866-623-2002. Connect with them. Harold, his website, rarecoloreddiamonds.com. The telephone number, 1-800-432-1022, and our newsletter. We send it out via email free of charge every week. Get it from Harold or worldwide. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week. This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on October the 26th, 2012. Our time is 8:43 Mountain, 10:43 Eastern. Our radio show runs AM 640 in Toronto, QR 77 Calgary, 630 CHED Edmonton. If you ever miss a radio show, they are archived on Harold's websites, rarecoloreddiamonds.com and HESradio.com. We also have a free podcast through iTunes, World Financial Report on Radio, through iTunes, absolutely free. Just put iTunes on your computer free of charge, and our radio show is portable. You can take us anywhere. And as we start the show today, we should wish our engineer, Mark Patterson, he's having a birthday on Sunday, our audio engineer. And Harold, you had a birthday yesterday. You were out having some Italian food with the family, and happy birthday. Sounds like you had a great time.
Well, thank you very much, my friend. Yes, 59 years old on the 25th of October and feeling good. We've got a tail end of a hurricane going on down here, believe it or not. Right now there's a Hurricane Sandy going through the Bahamas, and obviously being in Florida, it's affecting us. So we've got a lot of rain, 50-mile-an-hour winds, a lot of beach erosion, tremendously. In fact, the major road along the beach is totally shut down because there's 3-4 feet of water. So, it reminds me of about 7 years ago, actually, when October 24th, the day before my birthday, is when Hurricane Wilma hit and absolutely devastated my area. I had $100,000 damage to my house. We actually had to move for 2 weeks till things got back up again. So, it's crazy that you get these storms at the tail end of the summer type of thing going into the fall, but they still do hit. And there was, even though it was only a Category 1 storm, Randy, there was 11 deaths in the Caribbean. So still did a tremendous amount of damage and unfortunately took 11 lives. So anyways, getting to what the markets did this week, it was a rough week in the markets, but we anticipated that. It's the tail end of the seasonal trade in gold and silver, and that put that in combination with the huge amount of short positions that the banks had in the market at this time is why the markets did what they did. It was only a few weeks ago the gold was at 1,800, and we said that if gold didn't break 1,800 and close above that, that we would see a pullback in the market, and that's basically what we got over the last 2 weeks. Gold traded down to $1,701. It didn't break that heavy support of 1,700, and now we're back up to 1,720. Gold's up 580 on the day. The silver market, the same scenario. The market pulled back in silver because it's a seasonal pullback, and the market got down into the $31 range. There's very heavy support in silver at $30 and at 28. Now, again, there's no guarantees that we're going to see gold break 1,700 or silver break 30, but even if it does, it has no influence on what the long-term situation is for the market. In fact, even over the short term, the market looks great. So I know it doesn't make sense to some people as to why we would be so bullish on gold and silver and see the markets fall off at this point. It basically happens almost every year. It's a seasonal trade where the markets are weak during October. They start to strengthen again by the first or second week of November, and then we see a tremendous moves in the market, November, December, January, February, which are the 4 strongest months for the precious metals markets. So again, this will only affect those that are trading the market on the short term. We don't trade. We're basically buy and hold. We feel that over the long term, gold is going to be at a substantially higher price than it is right now due to a weak currency market and extremely high inflation. Same scenario with silver, except we're even more bullish on silver because the same scenario is there, a weak U.S. dollar and the potential of extremely high inflation, but there's also a shortage of silver, and add that to the fact of a supply and demand situation, we believe that silver is really going to take off. Again, this was a tough year, and one of the reasons that the market didn't perform, to an extraordinary extent is primarily because it's an election year. And again, there's uncertainty in the market until the elections in the first week of November, and then we'll have a much clearer indication as to what's going to happen. A lot of pundits feel that it doesn't matter who gets into the White House, situations are not going to get better than what they are. The U.S. is in huge trouble. They owe $16 trillion. The middle class is doing terrible, and until the middle class starts to do well again, there's no chance of a recovery, in my opinion, because it's really the middle class that spends all the money, pays the taxes, and that's just not happening at this particular point. So again, the reason that you want to be in the hard asset markets, meaning precious metals, gold and silver, and primarily diamonds along with that, is because if you go back in history proves that those are the 3 assets that will do extremely well during times of high inflation, currency devaluation, and that's exactly where we're heading. In the newsletter this week, and it was a phenomenal newsletter again, hat goes off to Randy. He really does a phenomenal job finding the information that we need to make an intelligent business decision. If you watch Wall Street and the cheerleaders on Wall Street, everything looks great, but I can assure you, these are the most dangerous times that we've been in, and moving forward for the next 3, 4, 5 years could get extreme. So all we want to make certain is that the listeners to our radio show and our clients understand what's going on, is prepared for what's going to happen in the foreseeable near future, because we don't have to lose money in the markets just because stocks and paper assets are going to fall. If you do the right thing and get into the hard asset market, you're going to get through these next 5 years without a lot of difficulty. In fact, we anticipate making an awful lot of money. Now, in the newsletter this week, and this is extremely important, Greg Hunter interviewed John Williams. I've known of John Williams for decades now, for the last 20-some-odd years, and he's one of the top commodity people in the business. He's saying that a dollar sell-off and hyperinflation is going to happen by 2014, which we all know is only a year from now. Economist John Williams says that the latest round of open-ended quantitative easing has set the table for global dollar sell-off and hyperinflation no later than 2014. There's no way the consumer can fuel the economic recovery, and there is no way we're going to see one in the near future. William predicts the Treasury is going to have to have funding problems, and that means the deficit is going to get an awful lot worse. They're talking that there's going to be an awful lot of money printing. The Fed's primary concern is to keep the banking system afloat, and they're not doing a good job at that, William contends. There's $12 trillion in liquid dollar assets held outside the United States. So it's only a matter of time. With all the Fed printing, will trigger a sell-off in the dollar, which we've been saying for a long time now, and it'll provide an early start to hyperinflation, which is one of the major things that we have to be concerned about. Gary Schilling, on the other hand, is saying that it doesn't matter who wins the election, the economy is screwed either way. Mark Faber is saying that we're in a colossal mess for the next 5 to 10 years, and he's saying that stocks could fall 20%. The wealthy advised to sell stocks for gains before the unfriendly 2013 season starts. sell. That's the message from financial advisors who are telling wealthy clients that the remainder of 2012 amounts to a last chance to sale on federal tax rates. Taxes are set to rise in January in the U.S., pushing the top rate on dividends. Listen to this. This is those Bush tax credits that I've been talking about for the last month or so. The U.S. is pushing the top rate on dividends to 43.4% from 15%. Who's going to buy bonds and stocks that pay dividends when you were paying 15% and now you're going to pay 43.5%? It takes away all the profit potential and makes it even more risky, and those are supposed to be safer investments. The same thing with capital gains on stocks. It's going to jump from 15% to 23.8%. So again, it takes the motivation of trading short-term stocks out of the equation because, again, it's almost like your tax rate is almost going to double. So that's where the major situation is, and that's why the stock market could sell off 20-30% going into 2013, which is why we're recommending that you be very, very cautious in the stock markets at this particular time because, again, these are the type of scenarios that could send the market down 30-40%. The other thing is that we talk about a recovery in the United States, that it's got to be led by the middle class, and they did a survey and they found that 40% of Americans, 40%, have less than $500 or less in savings. $500 or less in savings. They took a survey of 1,100 Americans and find out that 4 out of 10 don't have $500 in their bank accounts for savings. So how in the world is the economy going to recover when the middle class has absolutely no money? It's absolutely infuriating. You know, the fact is that the middle class got so beaten up by this whole situation starting in 2008 where all of their wealth was taken away from them because, let's face it, with most people, your major equity and the major money that you have put away for your future is in your home. And when home values in the United States plummeted, like they did in 2008 and 2009, it took away everybody's money. So I just don't see the recovery. You know, I listened to the debate earlier in the week, and I got a lot of respect for Mr. Romney. I mean, he's a billionaire that's made it on his own. He's really a first-class guy every step of the way. But listening to both of them talk, they're all talking about not raising taxes. Now, I understand for re-election purposes, you know, why you're going to say that, but how in the world is a country like the United States ever going to get out of financial trouble if you don't raise taxes? I know it would be an unpopular thing to do, and in all reality, you know, one of them talking about raising taxes would probably not get elected, but the bottom line is that the United States, as most countries do, work on tax revenues. And if there's no taxes coming in, if the economy is not good, people aren't working and that type of thing, and they're not paying taxes, there's just no way in the world that the U.S. is going to get out of financial trouble. So it just doesn't make an awful lot of sense what these guys are saying. But the bottom line is that we're going to see the election over in the first week of November, and then the markets are going to do what they're going to do, and by the end of the year, we could see a massive sell-off in paper assets like stocks and in bonds. So be very, very careful about what's coming up. Again, what happened in the metals this week was expected. It's a seasonal low in gold and silver. We're going to head into the first week of November. The markets, in my opinion, are going to turn around quite substantially. There's a lot of things happening. Oil also sold off this week, but again, we're a week away from the elections, and that was a no-brainer. We knew that was going to happen. But all in all, I think the markets look fantastic for the markets that we're in. This pullback in gold and silver, again, silver could pull back to 30 or 28. It's not going to affect us in any way, and I would be a major buyer in the markets at these lower levels. I love the gold and silver market at this time. The diamond market is on fire. We've never been more excited about that market. I believe that oil at this level is a phenomenal buy. There's no way that OPEC is going to let oil prices go much lower, but again, it has been forced down this last couple of weeks because of the elections in the United States. In California, oil prices and gas prices were at the highest level ever in history, so you knew that for election purposes, that they were going to bring down the price of oil to make things look better for President Obama. So all in all, again, we're almost over with the sell-off in metals. I'm extremely bullish on our recommendations, gold, silver, and diamonds. I believe that that's what's going to get us through these next 4 to 5 years, and I believe we're going to make a fortune in the market, which will lead us to more than likely extremely high interest rates 4 or 5 years from now. Again, the game plan is to make our money in gold and silver and diamonds and then sell and put our money in the bank at much higher interest rates if that is the scenario that works for you. So all in all, again, this pullback was expected this week. It did basically exactly what we thought it would, but these markets are going to turn in November, so get ready for a nice rally going into the latter part of the year.
And I think they've done a masterful job of trying to keep the markets contained, all markets, because of the U.S. election. The election coming up in about a week and a half, and these markets have been managed to keep things quiet. There is no doubt about that. We want you to speak with Worldwide Precious Metals. That's the company Harold recommends you use when it comes to investing in gold and silver, platinum, palladium. Their telephone number, 1-866-623-2002. For those that are in Calgary, they are going to be there the week of November 12th, and you can call them or go to their website, wwpmc.com, and connect with them to book an appointment. Now, they would be happy to meet you. There's no obligation. They're just there to meet existing clients and meet people that would be interested in, obviously, being educated about the hard asset market. And if that is you, they would be happy to meet you. No obligation. 1-866-623-2002. Their website is wwpmc.com. And I would say to you, go meet with them. Ask them about the gold to silver ratio, gold and silver backwardization. Also, we had this story from last week. Ask them about this. We are about to head into the strongest month for gold performance. And indeed, at looking at the next 4 months, investors could capture 56% of their annual gold gains and a whopping 66% of the annual silver gains by holding the metals over the period November to February. In contrast, the common belief is that September is the strongest month for gold bullion. In fact, it is November, with December being the third best month for gold prices over the past 10 years. Speak with Worldwide, meet with them. If you are in Calgary, give them a call throughout the country, 1-866-623-2002. Their website is wwpmc.com. And you have to know that since 2001, gold, silver, and diamonds have resumed their role as a store of wealth, protecting you against the decaying purchasing power of paper money. And that's the whole idea behind this show, and that is stopping the destruction of your paper wealth by having an allocation of hard assets in gold, silver, diamonds. Now, one of the top stories that we had this week, and Harold touched on our newsletter, that's why we do our newsletter. We want a fresh, new show every week, which we've been doing for over 10 years, updated material, and you can follow along via our free weekly newsletter via email. If you'd like to get it, speak with Worldwide, 1-866-623-2002 or wwpmc.com. They will be happy to send it to you. In our gold section of our newsletter, some quotes that we wanted to get to. Rick Rule, he says, for those who like to accumulate gold, you need to view these price declines as an opportunity. From my point of view, I'm going to be a very systematic buyer of gold until I see the system begin to heal itself, which leads me to believe I will be a buyer for a long period of time. Rick Rule with Sprott Asset Management, John Embry with Sprott Asset Management, and John said this week, so after the election is over, the president is going to have to confront some very serious problems coming up to this fiscal cliff, and it could be quite disruptive as the United States tries to deal with the fiscal cliff that will be very supportive of higher gold prices. You have to remember that anybody who thinks gold isn't a good investment here is voting for currency and the U.S. dollar. And to me, that's an almost impossible argument to make. There have been a lot of disappointments in the third quarter when it comes to U.S. companies, and a lot of these are GDP related. Their revenues aren't good, and their guidance is getting even worse. Robert Fitzwilson, in the investment business for 40 years, said gold and silver will continue to move higher on a secular basis. Although it could be possible there might be an initial pullback as people feel that our fiscal imbalances are on the road to being reversed. That will be short-lived. It will take many years and a mandate from the population to achieve that feat. So wealth erosion will continue as fiat currencies decline. In the meantime, keep accumulating gold and silver, and just be aware that the equity markets may experience a significant rally if the medium-term resolution is perceived to be positive, and that does not seem to be happening. One of the other big stories that we had this week, Brazil purchased gold for the first time since 2008. As well, there were other countries dipping in and buying gold, Turkey, the Ukraine. But when you have a country like Brazil buying gold for the first time since 2008, it does say a lot. And one of the stories, I think, is a must-read for those that are interested in investing in silver or currently invested in silver. Bloomberg did a story, and it was called China's Silver Demand to Advance to a Record on Wealth Protection. And they're saying in this story that silver demand in China, the world's second largest user, is set to jump as much as 10% next year to a record as investors look to preserve wealth. And they're saying in this article that the Chinese, they want hard assets. And one of the reasons they're taking a look at silver, it requires a lot less funding. And many people are turning to silver over gold in China. This is a must-read article, so get our free weekly newsletter from Worldwide. Speak to them. For those that live in Calgary, set up an appointment. Their telephone number, 1-866-623-2002. Their website is wwpmc.com. Harold, we have about 3 minutes left in our segment, but now is a time to take a look at the seasonality of hard assets. As I mentioned on the last show, we mentioned here today, November through February, very strong for seasonality, gold and silver. Now's the time to get involved in this market.
You better believe it. Again, the markets over the short term did exactly what they were supposed to do. October is a slow month for metals, and then things really start to pick up. So again, if you're a trader, that's something that you should know. But we're not trading here. We're buying physical precious metals and holding it for the long term because we're concerned about hyperinflation. And I just don't see any way that that's not going to happen, because we're selling ourselves really down the river. All they're trying to do at this point in the U.S. and the Federal Reserve is printing as much money as they can to try to ignite the economy. But as I talked about at the beginning of the show, unless the middle class gets back into the game, which I don't see how they're going to do at this particular point, I just don't see how the economy is going to get better. So this is all going to lead to inflation. It's already starting to, and there's just no doubt in my mind which route we need to go. If you go back in history, gold, silver, and diamonds have been the three biggest winners in times of high inflation, and all we need to do is make certain that we have ourselves protected, because there is no doubt in my mind, and many other people that are brilliant in this business, that feel exactly the same way.
We've talked about Jim Rickards in the past on the show. He wrote a book called Currency Wars, and we're starting to see currency wars. Well, the United States, we know what they're doing. They're debasing their dollar. They want it to go down. We know that China's manipulating the yuan. I've heard a lot about that. Hong Kong intervened this week to defend their peg as the upper limit was tested. You can read that story in our newsletter. Japan, they're joining into the currency wars. And the truth is, when you look at currency wars, the only thing that is gaining in this environment is gold and silver. Currencies going down, gold and silver going up. We know that the fiscal cliff, Harold has talked about it quite a bit in our show in the past, in the United States is a huge concern. And you're starting to see that the economy is very, very weak, not only in Europe, but the United States. Firings reached their highest since 2010 as Ford to Dow faces sales slumps. And they're saying Ford and Dow Chemical joined a growing number of companies firing thousands of workers. A sluggish U.S. growth and Europeans' deepening recession led to a persistent slump in sales. In fact, so far, they have announced elimination of 62,600 positions at home and abroad since September 1st. the biggest 2-month drop since the start of 2010. And firings, they are totaling 158,000 so far this year, more than the 129,000 job cuts in the same period of 2011. You're starting to see corporations, they're not meeting their guidance, their earnings. Even Apple the other day had problems, and they're supposed to be the be-all and end-all, and they're struggling. So now is the time to look at hard assets. Connect with Worldwide Precious Metals, 1-866-623-2002. Their website, wwpmc.com. If you live in Calgary, they're going to be there November the 12th. Speak with them, meet with them, educate yourself about having an allocation of hard assets. We're going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this.